Hello, I'm Nick Tumolo. I'm one of the owners of Tumolo Financial, and welcome back to another monthly Tumolo talk that we like to do just to kind of go over different type of things, Social Security timing, taxes, am I going to run out of money, or even some recent things going on because we've even got a suggestion, and you guys can always give us suggestions. Like precious metals was one of the suggestions we did a couple years back for someone. So let's get started. Usually, what I like to do at the end of the year is tax planning because that's what most people will come in and ask me. Okay, what should we do for tax planning? Should we be looking at doing some Roth conversions or should we even looking at outside retirement accounts, which I'm going to talk about today? So, tax loss harvesting, what that is. It's an investment strategy that offsets capital gains with losses from your investment account. So, for example, and I'm just going to pick on two stocks. This is not something that I'm saying that's happening right now. Apple, let's say Apple stock is up, I don't know, in your account, $10,000. And in one other stock, I don't know, UPS, we'll say, is down $10,000. What you could do is you can actually sell both off and it offsets. So instead of having a $10,000 capital gain, you now have zero because you sold capital gains of 10,000 and a capital loss of 10,000. So there's different strategies for this, and this is why I'm bringing up the next slide too. Your capital loss can only exceed for a married filing 3,000, single filing 1,500. But the big thing too is because I've actually run into this with a few people coming in. I had someone come in actually last month, and they had a $40,000 capital loss that they've been using year after year because the unused losses carry forward indefinitely too. So if you did sell off more losses than gains over 3,000, they do carry over. This does need to be done by the end of the year for tax loss harvesting. It's not like doing contributions where you can wait till April 15th. This has to be done by December 31st or the last market holiday. Um, Keep in mind too, taxes are not a 1 year fix. A lot of these tax strategies that I go over, tax loss harvesting, or other things that we do, like I said, Roth conversion type things, it's usually a year over year approach that you're looking at things. What's the best advantage to you and what are your goals? And why I do bring that up because of tax loss harvesting. Some people might have a lot of gains that they've held something for a long time. Maybe they held Apple earlier on in 2000 and now they have, I don't know, $100,000 of capital gains, let's just say. And if your goal is, I don't need that money, I'm going to pass it on to my kids, there's other opportunities to make sure that no one's paying tax on that money. And what I mean by that is because if that person had an $100,000 capital gain, if you sold it off and you didn't have any offsets, like we just went over, you'd have to pay tax on $100,000 of capital gains. But if you do pass it to your kids down the road, they actually get a step up in basis. So what happens is on the date of your death, they go over that Apple stock. Like I said, I'm just pick on Apple in this situation. That Apple stock, if it's worth, let's say $100,000 at that time, it's like the kids got it at $100,000. So all that tax, that 100,000 of capital gains actually gets wiped out for them. So there is other situations that I wouldn't do the tax loss harvesting, and it depends on your goals and what you're trying to accomplish. And that's really what I want to stress in this situation. What makes sense for the both you, and what in your situation, what are we trying to accomplish? So tax loss harvesting, what you're trying to do is just match up gains and losses to pay the least amount of taxes going forward. But if you do have extra major gains that you've been holding on things for a long time, it might not make sense to do that tax loss harvesting. So that's why I like to bring up these different topics is kind of going over it. Everything is not black and white. I wish it was. We all do. Make things life easier, especially taxes. Taxes are just so complicated. People just don't like to look at them or think about them. But there's ways, no matter what, whether it's your IRA or whether it's doing these non-retirement accounts, there's little ways of we're all going to pay our fair share in taxes, but there's ways of kind of getting around some of them to help you out and give you the best advantage moving forward. So, how we can help, you can give us a call at the number right on the screen right there to get your complimentary Tumolo retirement checkup. I didn't go over that today, but it entails going over some of the tax planning too, kind of implementing that plan. So you can schedule an appointment with us to go over your plan, see if this is something that you need to look at, or it's something that, you know what, let's hold and use it to pass on to that legacy planning piece. Because sometimes what I'm doing with people is I'm taking money and uh, my clients are living off of their IRA or Roth money, and that taxable account or the joint account where it has those capital gains. Maybe we're just letting it ride, and that's going to be going on to the beneficiaries down the road. And it might make more sense doing it that way. Or if you do need it, how do we sell it off to get the best possible situation for you? So yeah, you can call us on that phone number to schedule an appointment today. And one last thing, we do additional Tumlo talks monthly. I know I went over in the beginning, just kind of these topics. And like I said, you can always suggest a topic to us if you want to email, call us, or if you bump into me, our clients, you can just give me a topic. Nick, can we go over blank? And we'll go over that for you. So, if you have any question about tax loss harvesting, give us a call. Thank you, and have a happy holidays.